Hello, this is Mark from TradeInformed.com. Welcome to this video on using Fibonacci retracements in Forex trading. This video is to accompany an article on TradeInformed.com, and a link to that article is below the video. So in this video what we're going to do is we're going to look at the price action on the screen, which is the British pound against the Australian dollar. We're going to look at how we could place Fibonacci levels on this chart and how these levels could have been used to enter trades, set profit targets and stop losses. Obviously there is a certain amount of the wisdom of hindsight, but I think looking at these charts we can see that the Fibonacci levels did provide very good support and resistance levels. Okay, so in placing our Fibonacci levels, we first of all want to identify the most important, the most significant swing highs and swing lows. And on this chart we can see very clearly here the biggest and the most significant swing high, all the way down here to the swing low. This is a very significant move for the Forex market. In fact, it's something like over 1400 pip move, and it took place over the course of a series of months in 2012. After this big move to the downside, scrolling forward, we can see that there's a very strong and fast move to the upside, which stalls out here very nicely. It's gone through these levels. It doesn't mean that these levels are not important. They may in fact subsequently prove to be important, but the strength of the up move meant that the price just traded straight through these levels with very little, if any, retracement. However, once we get to the 61.8% retracement, we can see that the price does react. In fact, it reacts quite strongly, and we have a move back down. It finds support very nicely indeed at the 38.2% retracement level. You can see here. And what we would have almost certainly done at the time is look at this move in the context of a smaller set of Fibonacci levels. So we snap this into place, and what we can see immediately, and it would have been clear at the time, is that the price is trading at a very high level. It's trading around the 61.8%, and in fact surrounding the 78.6% level, before finally bursting through and resuming the rise. Now the price goes up a bit further, but then stops here, which coincides very nicely with the 78.6% retracement level of the big down move. Also it coincides nicely with the 161.8% Fibonacci extension, which I'm going to look at in another video. Okay, so from this point we now get a more significant downtrend that goes through the bottom of this 0% line and suggests to us that in fact the downtrend may well be resuming. So what we can do is we can put on another set of Fibonacci levels. This is quite a big move in itself. We're looking at almost 700 pip move here, and we've got a new set of Fibonacci levels coming forward here. First set of price action is contained in a box with resistance from the 38.2% level, but it doesn't break down any further. In fact, it breaks higher, going above the 50% before hitting the 61.8% level. This time we've not coincided perfectly with 61.8%. However, we've not been able to get it. We'd had one close above it, but not been able to match that subsequently, and we've had a very sharp sell-off afterwards. We broke below another 0% line, so we have to consider at this time that the downtrend is still intact, and then we can place another set of levels on this down move here. Okay, we have some similar price action to what we saw before, but slightly more compact. We're constrained by the 38.2% initially, but push up this time to the 50% level. We can see the price does get above it twice. In fact, it spikes above it on 2 consecutive days before going back down quite sharply and breaking again the 0% level here. So we have to assume, put that on there, so we have to assume that the downtrend is still in play. In fact it is. As you can see, we go down even further. The strongest move so far of this downtrend, this one here, not far off 1,000 pips to the downside. A very nice move, very tradable and nice move to the downside. Whether trading it on a swing basis, a failure basis here, or a break below here, either way we've got a very nice and very tradable move to the downside. Now moving further along, we've got price action that looks very similar to what we've seen in the last couple of times in this particular down move. However, as it subsequently proved, we've got a much stronger uptrend here. We quickly take out these levels, 50% and 61.8%, and the prices eventually are strong enough to get all the way above the 100% level, and subsequently the 100% level over here. And just today we can get the price just traded above the 100% level from all the way back here towards the end of 2012. The price has just spiked above this level. Okay, so there we have a video explaining how we can use Fibonacci, how we should put in the Fibonacci levels, and how we could have used them to identify the trends and set up good opportunities, good trading opportunities and areas to set our profit targets and stop losses. For more information about trading and the latest economic news, please see the website www.tradeinformed.com.